Stocks finishing the day in the red as investors gear up for earnings season, and the setup has been strong. The Dow and S&P 500 sitting near record levels. And our next guest is questioning the level of market exuberance, calling it the strangest meltup he has ever seen. Julian Emanuel is BTIG's chief equity and derivatives strategist. Julian, good to have you with us. Strangest you've ever seen in your entire career. Why?
Well, basically, if you look at the month of April, it's just an incredibly strong month and really almost straight up. You know, today was just a tiny pause in the uptrend. And when you think about that kind of melt up type action, what you would normally expect is rising volumes, rising enthusiasm, rising call volumes, especially since call buying on the part of the public has been a big story of the last 9 months. And we've got just the opposite. And so it really is a puzzler. On the one hand, we think it's actually a positive sign because what it says is that bigger picture, this isn't sort of the end of end rallies of what's only a 12-month bull market, when the average bull market lasts almost 4 years and rises 150%. We're up 85% in 12 months. But at the same time, it's a little bit more cautionary when we think about the potential for earnings season to be an upside catalyst. That's not likely going to be the case in the weeks ahead.
Julian, it's Karen. Let me ask you something you said about volume. So if the volume were much greater, then would you be thinking the market is reaching a peak?
We would be thinking likely there's more explosive upside, given the fact that when you think about it, we've overcome just a number of things, rises and falls in the meme stocks, rises and falls in EVs, SPACs, solar stocks, all of these things that, essentially have been quite speculative. But if we were seeing rising volume and rising price, we would say there's more to it. But that having been said, with the VIX down around 16, 17, you're still looking to put on downside hedges in case the music stops. And when the activity gets frenzied like that, you don't ever know when the music's going to stop.
Julian, Elon Musk asked Cathie Wood a pretty much a rhetorical question. I think at least he knew the answer to, let's put it that way, about market cap, the S&P market cap over GDP. Does it matter? We had an interesting conversation last week about it. Does it matter? Because as we sit here, we're somewhere between, 165%, 180% S&P over GDP. Market seems not to care. Should we?
When it comes to valuation metrics, what we've seen is the market doesn't care until it cares. The question is, what's going to get it to care? And if we go back to the beginning of the year, we've had these hiccups every now and then when yields started rising perhaps a bit too strongly. Now, if we go back to Chair Powell on television last night, that's not likely going to be the case that we're going to have yields rising strongly. What it says is that if you're committing new capital to the market right now, you shouldn't expect a profit right away. What we've seen, though, is that when you've had a paradigm of the market's sustained valuation at this extreme for a long period of time, again, this early into the bull market cycle, what we're likely going to have is a period of digestion before we move higher. But it is the market saying that it expects earnings, and particularly now economic growth, to catch up with valuations.
The notes that I got from our producer here, Julian, were very interesting because it says that you are very, very, with the very, very in all caps, bullish on Bitcoin. And so I'm wondering if let's say somebody at home had, a sum of money, let's just say $10,000 for argument's sake, to put someplace from now until the end of the year, would that be in U.S. equities or would that be in Bitcoin?
So here's our view on Bitcoin. Long term, we think the story is very sound. We think that it is likely to become an increasingly more important percentage of someone's assets. We think for now, there's some digestion to be done. There's a very important IPO coming out this week. We want to see how digital assets respond. We would say that with both U.S. equities and Bitcoin, you need to think long term. We do think both are going higher. We do think that Bitcoin looks quite strong into next year. but don't buy it just because you think this IPO is going to be successful this week.
Okay. Julian, thank you. Julian Emanuel at BTIG. For somebody who thinks Bitcoin is going to be at 92 grand next year, Tim. I don't know. It sounded like Bitcoin to me. But what do you make of Julian's assessment of this melt up?
Well, first of all, April is seasonally always a great month for the market, always often is. And May and June often can be awful months. So, look, the expectation of this earnings season being remarkable is something that I am concerned about. I'm more concerned about the point in which analysts and companies themselves have actually started to talk about normalized earnings. So I do think you have, for example, let's take the financials. Banks have rallied dramatically into this. I own money center banks. Do I expect their numbers to be good? I think they're going to be great. I think banks, if they follow the script that they followed, and they typically follow or have in the last 6 or 7 quarters, they're going to trade down on this news, and it's going to take them 3 weeks into earnings season for them to pick up steam again. And I think that's kind of where we are with the market.
Yeah, and by the way, they always trade. It always seems like they trade down on earnings, Dan.
Yep.
That's the pattern.
Yeah, they do. I think it's like Tim outlined. I think it's a particularly hard setup for a lot of companies that are, especially sectors that have outperformed. I'll just mention one thing, about Julian's caution near term about this, what feels like euphoria. It's really hard to find bear cases for the market right now, like really hard. He talks about in his career, he hasn't seen this or that. I can't remember a time where just the universal bullishness because of so many odd things that have happened, specifically over the last year, namely $6 trillion in stimulus, which is, about 30% of the market cap that we have here in the U.S. And I'll just make one last point. This year, although we are up nearly 10% in the S&P 500, we've seen 2 massive dislocations in the market, which is really actually should be very worrying to a lot of people about market structure. The first one in January about shorts, and then the other one, obviously, with Archegos about longs. And if you think that Archegos is the only fund out there that has very concentrated, very levered bets in stocks that have appreciated a lot, you got another thing coming. So if there is a reason for the market to sell off, then you remember that whole thing about total return swaps and the kind of opaqueness that we see there? This is going to be an issue here. So I don't know what the reason will be. I'm not calling for a big decline, but the market structure has been tested this year in both ways, and I don't think it's really held up particularly well right now.
Shepard Smith here. Thanks for watching CNBC on YouTube.